Hi, everyone. Good afternoon. Thank you very much for joining us. My name is Lindsay Lehr. I lead the payments practice here at AMI. And as Guillaume did, I'm also going to touch on major mega trends we'll be observing in the payments industry as we look into 2020. First, we need to kind of take a account of where we are today. And an important detail to note is that we are at about 67% average smartphone penetration in Latin America. That's up from 50% just about 2 years ago. So we've seen rapid acceleration, and this number is continuing to grow. That's significant because it represents now critical mass to enable people really engaging on digital platforms. We know that Latin Americans are very engaged in social media and messaging, but we're now starting to see scale in other areas. We have 36 million people in the region using ride-hailing apps. The most impressive number here is about 260 million Mercado Pago account holders. That's about 30% of the whole population of Latin America. And so really seeing scale when over the past couple of years, we've seen digital wallets and other platforms struggle to really gain in their numbers. So on the one hand, we have very significant digitization indicators. At the same time, cash is still the #1 payment method in Latin America. The chart here shows that of all retail payments in the region, cash represents more than 90% of volume in some markets. And this is equivalent to about $1.5 trillion in retail spend in cash annually. And this is, of course, a massive opportunity that everyone wants to claim. And this prize, this $1.5 million, is the driving force of the trends that we'll see taking place in the next year. So on to the next slide. What are these mega trends? I'll touch on each of them very briefly and would love to have more in-depth conversations with all of you afterwards. First of all, we're seeing the actual physical plastic card starting to lose some relevance as we see increasing usage of QR codes, in-app payments, invisible payments, recurring payments. As that happens, we need to start thinking about what does our user interface and our relationship with our customer really look like if the physical infrastructure is starting to disappear. Similarly, on the acceptance side, with digital platforms offering QR code acceptance and tap to pay on your phone technology, the actual POS infrastructure is starting to face some competition. And by the same token, when we don't have that physical infrastructure, what changes will this make in the industry, especially for small merchants who are looking for a cost-effective way to accept payment? We are starting to live an acquiring and acceptance revolution in Latin America. Okay, we see traditional acquirers being forced by regulatory and market pressures to open up, specifically in Colombia, Chile, Peru, and Argentina. We can see this finally happening. Traditional years-long monopolies and market concentration opening up to more competition. At the same time, we see the rise of independent digital ecosystems that are touching both issuing and acceptance and are in essence operating a closed loop system. So we have traditional players opening up, new entrants having a circular network effect. So these two things happening at the same time, creating really interesting dynamics. The race for the super app, this is the trend that is probably getting the most attention and the most conversation right now. Everyone is wondering who will replicate the WeChat model in Latin America. Now, WeChat arose out of messaging, right? But what we're noticing in the region is that these lifestyle apps are converging around 4 major pillars, including commerce, delivery, logistics, and payments. We see Rappi and Mercado Pago kind of at the forefront of this trend. Uber is also an interesting player, having now announced its launch of Uber Pay in Brazil and potentially Mexico down the line. So we'll be paying very close attention to these players and how they're changing payments, commerce, and digitization in general. The 5th trend here is bank accounts becoming a payment method. As we know it today, digital payments really rely on credit and debit cards. But as central banks and retail banks create the conditions to implement real-time and instant payments, the bank account in and of itself is becoming a payment method. This has profound implications for financial inclusion and how we interface with each other and merchants. So this could really be a disruptor of the paradigm of the industry as we know it. Finally, we can expect fees to trend towards zero, all types of fees. We're noticing specifically in merchant fees, trends, very heavy downward pressure on merchant fees, 0% in many cases. This is causing banks and others to move from a fee-based model to a data-based model, thinking about what kind of new revenue models can I look for based on data monetization. This will become increasingly important as APIs open up and open banking starts to get roots in the region. So on the next slide, as I mentioned, all of these trends warrant further discussion, and I encourage you to ask your questions. We'll try to address some of them in this session and talk more about it offline. But this slide just kind of wraps us up. Going plasticless and going terminalless, most obviously with the rise of QR code, we have a proliferation of regional and local players offering QR code payment in Latin America, as we can see on the map. Today, we estimate that QR represents only about 2% of card payments. So that's a very small sliver, but with all of the investment flowing from the public and private sector into plasticless and terminalless digital payment, we can expect that pie slice to open up more throughout the year. And this has very important implications in terms of how we engage with consumers, what our user experience looks like, what our partnerships are, and really challenging and redefining roles of traditional players. So thank you for your attention. That's a very quick overview. Let's discuss more. This is essentially a question about B2B payments, right? And this is an area of the industry that does not get as much attention in terms of research at all. So it's a much more opaque area. What we do know is we actually did a study, a survey of more than 1,000 SMEs in Latin America. So we do have some insight into behavior among small businesses, and the results of this study are public and available. We saw that on average, payment terms for small businesses in Latin America was 31 days. And about only 17% of companies said that none of their suppliers provide net terms. So we know that, about 30 days is about average. What the trend is, we don't have as much visibility there. This was in a one-off study. But it seems as though payment terms are becoming more flexible, especially as credit is becoming more available to companies of all sizes. So as credit becomes more available and cash flow solutions become more available, we may see payment terms starting to become more flexible. Complex answer to this question. For cardless payments that actually run over card rails that are dependent on a credit or debit card credential, a contactless transaction, or a transaction taking place with Apple Pay or another digital wallet. Really the technology in place there for security is tokenization. Tokenization has decent penetration in the region, but not every bank has fully technically enabled its portfolio for tokenized payments. So we do have a very decent penetration of tokenization, but there's still a lot of growth to do, especially in debit. And that'll continue to progress as wallets and cardless payments become more of a reality. Where we have the bigger question is in security for payments that do not run over card rails. So bank account transfers and wallet to wallet transfers. There's no sort of international security standard for these types of transactions. These standards are starting to be developed as it becomes more of a reality in Europe. Central banks are very concerned about alternative payment
for digital transactions because we don't have these security standards in place. KYC is a huge concern, and this is really what central banks are most focused on. So I would say, our country's cybersecurity ready? Yes, in part, but there's still a lot of work to be done. Nubank is really the best example, right, of a true disruptor in banking. And what they've done with over 10 million customers at this point and expanding into Mexico and Argentina. What Nubank has done is identified the pain point of consumers who were being excluded from traditional banking. When you go on their website, it's fantastic. The images are young people partying and skydiving and riding motorcycles. It has nothing to do with banking. So they've reflected consumers' values back at them. When a consumer looks at Nubank, they see themselves. They see what they want in life. They see adventure, freedom, all these things you don't really connect to banking. And they've connected emotionally and also with their products. Very easy to access credit card and no fees. Very simple product. Now, others have come in their wake. We have PagBank from PagSeguro and many others. So they have been successful, and this model will continue to grow. Whether traditional banks are successful in emulating that model, traditional banks need to understand that consumers are looking for a different set of values, and those values need to be reflected in their products. So it's one thing to say you're digital, to say that you're modern, but if that is not reflected in your messaging and in the nature of your products, that message falls flat and consumers can see right through you. So, in order to do that, banks need to more aggressively partner with startups and fintechs. We've seen that begin to happen as banks more and more are working with startups, mostly to address operational challenges and create efficiencies within their systems, not so much on the user experience side. Whether or not banks will be willing to introduce fintechs in the user experience and give them access to their consumers, that's where we'll see, that's the big question mark as to whether banks can really embrace this digital revolution that we see happening. Thank you for the question. Nequi is a really great example. It's an interesting case because it's a fintech that sprung out of a bank, Bancolombia. So it's a bit of a hybrid. And Nequi operates as a wallet, stored value. You store, it operates as if it were a bank, right? You store your value, you can withdraw cash at ATMs, you can make payment via QR. Some companies pay payroll via Nequi. Some social benefits come in via student loans, student grants and subsidies. So Nequi has created a strong user base, but still is struggling to have real traction in keeping money in a digital format and creating a cross-pollinated ecosystem, similar to other wallets and online banks in the region that are not connected to any sort of digital platform or commerce opportunity. People stay engaged on a platform when you can use the platform to make payments and access products and services. This is why Rappi has been so exciting. Similar, other examples, similar to WeChat in China. Now, comparing it to Nubank, the difference with Nubank is that Nubank is actually a bank with a banking license and can issue credit cards. And Nubank has made has been successful thanks to its credit card product. Its debit card or digital account came much later. So Nequi has access to that banking license thanks to Bancolombia, but does not offer a credit card. So that's potentially an option open to them. Really, those are the main factors when we're thinking about Nequi and comparing it to other types of wallets. So if we're talking about publicly traded companies with a focus on cross-border, there's a couple of companies that come to mind. Well, The first being many cross-border focused companies are not publicly traded. So when we're thinking about listed companies, Mercado Pago is certainly comes to the top of the mind. Not doing a lot in cross-border yet, honestly. However, they are present in almost every country in the region. They are the #1 brand when we think about a marketplace, Mercado Libre. And with their regional approach to payments and logistics, are really setting themselves up to be an intra-regional player. When we look outside of Latin America, cross-border solutions, the company Boa Compra, which is owned by PagSeguro, one of the most exciting publicly traded homegrown companies in the region, is a cross-border payment solution that enables international merchants to sell into the region as if they were present, offer local payment methods, local direct connections to acquirers. So I would flag those two. The other is Adyen, who sets up local payment operations, but is a huge hitter with the global digital players, recurring payment, digital subscriptions. So I would flag those 3 companies to look at. In these same interviews that we're doing, we've learned that a good handful of companies, especially in banking, have already moved to cloud software, and it has provided enormous flexibility, agility, and is cheaper in a lot of cases. And we see on the fintech side a lot of companies adopting Amazon Web Services and things like this. There's still a lot of companies that have not made that transition, but especially in Brazil and Chile, we see heavier concentration of cloud software. In terms of taxes, governments are starting to become more, are awakening to the fact that international digital service providers are kind of getting off without contributing to the tax burden of the country. So we have the La Ley Netflix in Argentina, which is a long list of digital companies in which you're required to pay value-added tax. This type of tax is gaining popularity, and we can expect this to continue as a trend in the region. When we look at venture capital in Latin America, investment in general is much lower than in other parts of the world. And so while venture capital investments have been growing year over year, especially in fintech, venture capital is still quite low compared to other emerging markets, especially Southeast Asia. So this tells us that the overall ecosystem, local venture capital, local startups, is still very underfunded and represents terrific opportunity for international investors to come in and inject what's needed to make something catapult. We have SoftBank making investments left and right in South and North America, but I don't know what the rest of that question said, but fintech continues to grow year over year. Every month it seems we're seeing record number in the size of transactions as more and more unicorns are seen in Latin America. But we can see that there is still ample opportunity for international investors and international competitors to come in and fill that space, which is still underpenetrated.